employees saying to you, I'm afraid to come in now? How do you continue running that business? And thirdly, how do you, if you do, regulate out of duty conduct of your employees, regulate their behavior, whether they're traveling to states that are in the red or staying in Massachusetts and potentially getting together with people? Do you want to put a ban on them outside of the workplace? So I think, again, you're going to hear a lot about planning, and from the employment law perspective, I think those are the top three issues. So thank you.
Great. Mark, would you like to go next?
Sure, thank you. Mark Nejame, McLean Law Offices, Real Estate, Business, Trusts and Wills, and office here in Northampton. So I think the first tip or trick is more anecdotal than quote unquote expert, and that is having it, looking into 2021, and in terms of marketing and in terms of your presence, it's more of a challenge, obviously, because you're not doing the arrives at fives in person. You're not doing the meet and greet, the lunches or the coffees or whatever that you were doing before. So you really have to explore all of the different avenues of terms of marketing your business and getting out there. The second legal question or tip would be in terms of looking at your business, and maybe this isn't a good time to spend money, but also looking at your business, talking to your accountant, your attorney, as to whether you might consider forming a legal entity. If you were an individual in business or in a general partnership, you might look into the tax advantages, legal advantages of forming an entity, an LLC or a corporation, and see how that might help position your business for 2021 and beyond. And I think the third thing that I thought about is also somewhat anecdotal, and that is you always have to, whether you're working from home or from the office or wherever you're working from, you always have to kind of treat your business as if it's as if it was pre-2020 and you were conducting your business in the same way and with the same vigor that you were before. So those were my three, and I'm happy to answer questions about any of those topics.
Great. Thank you so much, Mark. Dee, what do you think? Should we go to marketing or finance next?
Sure, marketing.
All right, that's what I was thinking too. Great minds.
We're on the same page.
Christopher, would you get us started? Tell us a little bit about you and your business, and then your recommendations.
Sure. Good morning. I'm Christopher Shappett, and I run a practice called Measured Marketing Lab. And our focus is the operations and analytics behind all of the marketing strategies and tactics. So we call ourselves like an intersectional role. And basically, I will help a client understand from the point of their wishes through the execution and the final measurement, what are the plumbing and wirings that need to happen. I'm agnostic to what the plan is, but I am disciplined about what the measurements and the tracking and the insights that you get from it. So when I think about dealing with uncertainty, it leads me to sort of a financial planning metaphor where if I know my future income is going to be interrupted, I'd like to know my financial status pretty accurately right now in order to make decisions. So you think about taking a look at your QuickBooks and saying, all right, where are my expense categories? I'm going to cut back here and there. Well, the same thing has got to happen in marketing, and it can't unless you've done all this planning in advance. So my thing is when a hurricane comes, you realize you didn't have your survival kit. Well, you're in a pandemic, get your survival kit ready. And my three tips have to do with what you, the owner of a business, need to have on your side of the fence in order to be an active marketer through agencies or through your own DIY. So the first is really fundamental. It's own your accounts. You're going to get help from services and agencies, and they're all going to offer to do things for you and set up little things that solve problems. Make sure they're in your company name. And I really recommend you set up a department email so that it's not you personally that owns all of these accounts at Google and GoDaddy and et cetera, et cetera, et cetera. That's my first tip when I start working with a client is let's get all the credentials organized and let's get them into the hands of the department email so that you can go on vacation, I can go on vacation. But at that point, you can hire agencies and then you can let go of agencies, all from credentials that you control. My second has to do with probably the biggest misconception that I come across is that I have analytics. And I say, great, what's your cost to acquire a customer? Well, I don't know that. So, you know, what's your lifetime value of a new deal that you win, or a new customer that walks in your door, or a new e-commerce purchase? It's a collection of metrics. So when we talk about finish setting up your analytics, it's making sure that you have an organized way to track all of the things that are happening that are critical to your business, earning new customers. And we like to think of it as micro conversions and macro conversions. So the micro might be that Amy publishes an interesting document on employee management during COVID. I download that PDF from her website. I'm not calling yet, but I'm downloading. That would be a micro conversion. When I actually go back and say, that was pretty good, I got to get ready, I'm going to call Amy's office, it'd be great if her phone number was tracked. So she could say, yeah, I got a micro conversion of a PDF download. And that same person came back and made, I made a sale. So geez, if I produce more content like that, that turned out to have a good return on investment. Whether she produces it, you hire an agency, it really doesn't matter. It's all about getting that data. So the biggest myth there is that people think analytics is a single code from Google that you slap in the back of your website and you're done. That has opened up a toolbox that requires configuration. And it's not the only tool in the toolbox. There's other tools going on, like that call tracking mechanism I mentioned. But if you really want to get into a position of strength and knowing how to make decisions, you need to know the stats across all the boards. And it's going to be a combination of tools. So I think the subject of analytics is minimized often, and it's actually more of a finance job. And then the last piece I would say, I watched this happen with my clients here during the pandemic. For the clients who had separate agencies but controlled centralized reporting, they were in the best position of power. They could ramp up or ramp down specific tactics, and they never had to worry about losing visibility to what the outcomes were because they owned the data. So every agency says, yes, we'll give you a dashboard, or we'll give you this, or get it in your own dashboard. Make sure everything's being collected in your systems. And then as you sit and make decisions about, well, I can acquire a customer for $50 through Facebook, $60 through Google Ads, but man, that PDF got me a couple of customers for a cost of 3 hours of my writing time. Now I can start making decisions. Okay, money might be tight. I'll scale back the hard costs and I'll spend on the soft costs. Social media posts, repurposing. So it gives you clues, or it says, man, these Google ads are the cheapest way I've ever gotten a customer. If I can get 5 customers for $100, I might as well put $300 at it. You can't know any of that unless you control all of your data. So I suggest that the third tip is consider disaggregating some of your agency roles into the experts that you need so you can more easily ramp up and down. And secondly, make sure that everybody's data is rolling into your data systems, whether it's just your simple analytics, or you're using a dashboard, or you're going full-blown business intelligence. Like my manufacturing clients, they need to know okay, great, we got a lot of top of the funnel traffic, and yes, it generated a lot of phone calls, and yes, we can see leads in the database, but what products were they and what's our margin on those products? Well, now we're slicing and dicing across which salesman did the best job of managing leads and what products did they sell, cross sells, upsells. So you can go from simple analytics and a dashboard to simple analytics dashboard that's really business intelligence. And you can choose up and down that scale depending on the size of your company. But owning your own accounts, preferably in a department name, being aware that your analytics are not completely set up until you can answer very specific return on investment questions. And then third, consider disaggregating your agencies, but no matter how you do it, one big agency that does everything or lots of small agencies, make sure the data is rolling into your systems. And then, God forbid, the next pandemic, you'll be ready to know what to scale up and what to scale down. Ironically, we found Google My Business was still cranking during the pandemic for home-based services. They're over 50% of our phone call traffic for one of my clients. So without the data systems, we wouldn't have known that we could cut back on some fixed cost and let the free stuff keep working, you know? So anyway, those are my 3 tips.
Thank you so much, Christopher. And then we'll turn it over to you, Joe.
Good morning. I'm Joe O'Rourke, and I do radio campaigns. And every day, Jane wakes up, she makes purchases. Sometimes in your category. One day it's tires or insurance. Maybe the next day it's pizza or dance classes for her daughter. Each time, Jane considers her options and she makes a choice. The end. This happens every day in your category. Jane chooses you or someone else. The pandemic doesn't change any of this. It just makes everything a lot more complicated and difficult, but the basic equation doesn't change. And you can't affect how much spending is going to happen in your category. You can only affect how much of it you're going to get. How do you tilt the outcome in your favor? Simple 2-part answer. 1, something about you's better. Quality, price, convenience, service, something. Number 2, you're more famous. You're better known. You have a better reputation. No one can buy from you if they don't know you, if they don't know you're an option and feel good about you, or at least okay about you. So it's a game of increasing preferences and probabilities, of tilting the outcome. Marketing, advertising, promotion, merchandising, it's all communication. We can use the term marketing to blanket it all. Everything, your website, your trucks, your business cards, your ad campaign, your storefront, your sign, your frontline people. This is all adding up to the sum of who you are and what your business is to the Janes of the world. And virtually every business that is doing well is on top of this. Now, here's the crazy making part. The outcomes are unpredictable. There's just too many factors you can't control. Regardless, I urge you to take a tip from top companies, local to global. They don't screw around. They have a marketing strategy and a marketing plan, and they get to it. They learn from their mistakes. They don't make amateur mistakes. And most of all, they don't think that they can somehow ignore the realities of a competitive marketplace. Virtually every business you see that's doing well is continually working on their marketing. And I notice this so often, especially on a local level, because that's really the pond I play in, mixing metaphors there. The businesses that are failing or folding, whatever else their challenges, they tend to not have their act together with marketing and communication. It's hard. It isn't free. It takes expertise, money, time, and repetition. There's a lot of options out there, and you can't do them all. They all work, but you can't do them all. Some are going to be more effective than others for your category. If you're a tack shop, mass media like radio or TV, probably pretty inefficient for you. If you're a beer, direct mail is probably just wrong. If you're a heating oil company, Your trucks alone can do a lot for you. Marshall McLuhan said, "The medium is the message." Marshall, the message is the message. The medium doesn't make the message work. The message makes the medium work. And nothing will overcome a messy, muddy, off-key message. People will ignore you. Communicate clearly. The message has to be clear, the offer good enough. Got to do it with a little personality, and you'll increase preferences and probabilities. You'll tilt the outcome. More Janes will choose you more often. I look forward to talking to you in the breakout sessions about this stuff.
Great. Let's move it over to finance. Thank you all so much. This is, I'm just so delighted that you're all here today. So let's go over to Molly. Molly, will you kick off the finance segment for us?
Sure, happy to. So good morning, everybody. I'm Molly Keegan, and I'm co-owner of Kern and Keegan Financial. We're a financial planning and investment management firm located here in Northampton. And I think Amy teed it up perfectly at the beginning of this. Again, the common theme is going to be about planning. So a couple of things that I wanted to kind of tee up for you is, first and foremost, everybody in the business world knows that the first thing you have to do is create a business plan. And I'm sure that everybody is doing just that. And the focus with a business plan does tend to be on revenues. You know, what if my revenue targets are met? What if they fall short? What if I exceed them? What do I do with that excess cash that may be rolling into the business? So that's kind of the fun part, kind of creating that what if scenario and imagining what can happen in the future if your business is successful. What oftentimes people don't do is focus on what can go wrong. And going wrong, obviously, has been underscored by the impacts of COVID. But it goes above and beyond not having the revenue coming in. And now is the time to really be focused, especially if you're in some sort of a partnership, on thinking about what can happen, not only if the employees get sick or hurt, but if the business owners themselves get sick or hurt. And too often we see that buy-sell agreements where disability funding may be necessary, or sadly life insurance may be necessary to fund them, is not put in place. And what we're finding right now is that unfortunately, given the context of the times that we're living in, this is becoming something that is much more on people's minds. They're realizing that this reality can happen regardless of age. So first tip is definitely to encourage you to go back and take a look at your agreements and make sure that you have proper funding in place. The second thing that we see is that oftentimes business owners are so focused all of their time and energy on the business plan itself that they don't take the time to translate that to their personal planning. And what I would say is that everybody doesn't need to work with a financial planner, but everybody should have a personal financial plan, just as you do for your business. Again, it's not fun, but you have to think through the ramifications of what if your income's interrupted. If you're part of a household, what happens if your partner's income is interrupted or worse, eliminated for any amount of time? And what are the ramifications on spending and retirement goals? So it is critically important that people carry through and at least think through all of that. And we encourage you to do that again as a household. And I guess the last thing I would point out before turning it over to Steve is a focus on liquidity. One of my frustrations is that when you kind of troll through Barnes & Noble or your local bookstore and you look at books about starting a business or investing, you can find so many of them out there that tell you that if you've got cash sitting on the sidelines, it's not working for you. And it really encourages people to be highly leveraged. I think now what we're seeing is that that is not necessarily the best strategy. And we feel very strongly that everybody needs to have access to liquidity. whether that's slowly building up a cash account, which can be very hard when you're starting a business for sure, we get that. But having an emergency fund for the business, having an emergency fund for your family, having a home equity line of credit in place. Again, if these are things that you hadn't done going into 2020, we would really encourage you to be focusing on that going into 2021.
Great, thank you so much, Molly. Steve, would you like to jump in?
Sure, thank you. And thank you everyone for your great comments and just a lot of insight and wisdom that you're sharing. My name is Steve Harrington, and I'm a partner in the firm of Bova & Harrington in Northampton, and we serve primarily businesses and their owners. This is a tough topic to break into three because there's so many subparts, and I'd love the pieces you all picked up. I'm going to sort of build on, or not maybe build on, but just take a side piece of what Molly was saying. It's just, you have to know where you are in a business. You have to know what your financial position is now. You need a way of looking into the future and knowing how you might pivot with things. Because one thing COVID's taught us is that you aren't sure what you're going to do next, but it's probably going to have to be different than what you've done in some way, some degree, maybe not a lot, maybe a lot, we don't know. And so you're going to need a budget, make your mistakes on paper. Molly called it a business plan. That's kind of the same. It is the same thing and it isn't. Set some milestones for yourself and give yourself some quick indicators. One of the things we often see is people will have a budget and they'll have an accounting system and they don't take the time to go look at that. And so they don't have a quick way of seeing if something's going right or wrong. So find out the quick things that work for your business. It could be just as simple as, the cash in your checkbook's getting low or there's less traffic coming through the door. It's going to be different for everybody. So find those. So that's really the first one is, and then last thing is make your mistakes on paper as part of that. Don't spend real money to make them when you can at all. Kind of if you map it out and plan it, you might be able to start saving your money just by figuring it out what's going to happen. The second piece, and this is going to be, what are your non-negotiable minimums in a business? And this really isn't different from COVID or not, but what are the things that you have to do to be successful and that you're going to agree on? And it's particularly important if you have a business partner, that you're all doing the things that matter the most. If you're letting the things, and usually the non-negotiable minimums are the things you often don't like to do, or you want to do something more interesting. So what are the things you've got to do to make this work, and how are you going to set either yourself up or with your partner so that you are going to be doing those things that you need to do? And then along with that is how can you keep each other accountable? How do you agree on doing that without making a confrontation? Could be, and for yourself, you might need to have some, if you're working in a sole business, maybe you're going to have somebody outside that you can be accountable to, that can keep you on track and keep you with your things that you have to be doing. And then the third thing is, what are the boundaries you're going to be putting in place? And everybody's got a different boundary. But when you some decision points that you're going to have to make, it might be that you have a level of debt that you don't want to go into in your business. That might be a boundary. It doesn't mean you don't have to cross it, but you're going to have to set it up with the time when you're going to have to think about it and not just wander through it. It might be, but an easy mistake to make if things aren't going well is to not set aside your money for your taxes. And it's simple and it's boring, but it's devastating if you get behind there. And just, what's the boundary for getting another employee? What's, as Molly had said, what's your personal boundaries? How much time are you going to put in? How does that look? So again, having a way of seeing where you're going and being able to react and pivot quickly would be the first. Finding your non-negotiable minimums, and then having a way of being accountable without any hassle or confrontation. And third is just what are the boundaries that you have that you're gonna set up. So thank you.
Great. Thank you so much, Steve. So this brings us to the next segment of our program, and this is one that I'm actually really excited about and I hope will prove to be useful to all of you.